For those of you that have been struggling with consistent profit, for some of you guys that have been making money and losing back to back, or for some of you guys that have always been like let me say losing money. See, like, for as a financial trader or as a forex trader, you know yourself already. You know, like, the kind of level you are as a financial trader. See, for some of you guys, the truth is that by yourself, you know that what you are doing is very wrong. How will you know that is that how you have been getting the nature of your result that you have been getting in the financial market? See, like, whether you like it or not, there is a saying that in 100% that only five traders, only 5%, I mean, out of 100%, some are saying 10, some are saying, based on statistical analysis, that 5 to 10% out of 100% of global traders, especially retail traders, are losing, are the only people that they are profitable in the financial market. Now, this means that from 90% to almost 95% of retail traders are losing traders, are people that have been losing back to back. It's either number one, people now that they have been making money but still losing the money back to the market. Number two, people that they are not even making money completely. Number three, people that they don't even understand if they are making money and losing it back, or they are not even making money. Now, these are mostly the three set of people that what that make that complete the 90 to 95% of losers in the financial market. See, like, as a financial trader and as someone that has been mentoring people, teaching people in the financial market, I discovered that whether you like it or not, majority of traders, this is one of the basic things that they have been experiencing, whether directly or indirectly. So now, based on this, I've decided to like make proper analysis, make proper study from like their how what success means, the process of success, and also why some of the beginners, especially most people, are losers in the financial market. Most people lose money, or most people make money and lose money back in the financial market. And I've discovered like there are three things that define success in the financial market. Gradually, I've decided to like build a series in this concerning this particular success process and this thing that define for you to be what a profitable financial trader. But for some of you guys now that are just joining us on this channel, one thing I'll tell you is that number one, I'm just giving you 2 seconds, smash on the follow, then smash on the like button also, so that I think this video, if you know that this video is part of the video that you need, I know that this video there are other people that will need this video, something like this. Smash on follow or the subscribe button, then smash on what the like button. Then also, if there are areas, if you think that you're among those people that have make mention, either people that what they are losing, making money and losing, or they are losing completely, or they don't even know where they are, just type yes or type one in the comment section there. Okay, guys, let's go back to the point. So I've discovered that there are 3 points that define success in the financial market. As long as whether you are a forex trader, whether you are a crypto trader, synthetic trader, as long as you are someone that trade that make money in the that want to make money in the financial market or through the financial market, there are 3 things that you must know. And I'm going to do series on the series of videos on this regarding these 3 things and how you will like walk through a very good process by becoming what a consistent successful forex trader. You remember there are people that make money, but the problem is that most of them they are not consistent in their profit. See, but some of these, like, let me show you this. These are some of the trade I'm watching. This is one of the gold trade I'm watching currently as far this time that I'm shooting this video. Because in fact recently gold has gone massively today as far this day that I'm shooting this video. And this is one of the trade already. I'm on my deadlock already. Price is already on my deadlock, and also I think AUD CHF also. We are piping the market on AUD CHF also. Price has already broken my TP1. That is my violation zone. But guys, there's a trade that means that is paining me. That is this trade. I wasn't able to catch this. I wasn't able to see this earlier because I was focused on what? On gold and AUD CHF. And also I discovered that GBPS also has gone on spike, massive spike also. You see it. This would have been a very good entry also, but I managed to miss this guy. This one also. This would have been a very nice entry. This would have been a very nice, simple trading setup that would have catch. But guys, we are still on gold. We are still watching this guy. So gold is already on TP1. It's already on deadlock zone. We are watching it. So now I said there are three things that define what success, consistent, successful process in the financial market. The first thing is something that most of you, in fact, the first one is where most of you guys have stayed. Most of the traders that have discovered, they have just like stay on this first one. They have capitalized only on this first one. Now, the first one here is that you must have what? A good trading strategy. Now, the first one you must have, I said, a good trading strategy. You must have a good trading strategy. Now, one thing that defines success in the financial market is what I said. You must have number one, a strategy, a good strategy. You must have a strategy. Sorry, said you must have what? A strategy, a good strategy. So you must have a good strategy, number one, or you must have what? A good plan. You must have a good strategy, or you must have a good plan. Some people call it a trading edge. You must have an edge, a tested edge, something that that is able to like survive the financial market. Now, most of the problem that most of you are having here is that most of you just stay on technical. Yes, you can trade tech based on technical analysis, you can trade based on fundamentals. So whether you are a technical trader, fundamental trader, or you are using both, what you are trading must be able to what? Survive the financial market. And when I say the survive the financial market, doesn't mean that you must trade all instruments, because there are some strategies that they are good for certain market and they are not good for certain market. So you must make sure that your what it means a strategy is a good strategy here is that it must be able to survive the instrument that you are trading. For example, now, if you are a currency trader, you must make sure that this strategy that you are trading can survive what? The currency market. You must build number one, build the strategy, test the strategy to know that this strategy is very easy and is what? Successful based on the currency that you are trading. It's not all about building the strategy. What make it good? Because there are many strategy. But for you now, a good strategy for you now is what I said. A strategy that can what? Survive the currency in or the instrument that you are trading. If it's a currency market, it must survive the currency market, and it must survive what? The individual instrument that you are trading. For example, currency market, you must know that it must survive what? If you are trading GBP, it is a very good instrument on GBP. If that instrument can trade both GBP and can trade gold, is okay, but you must make sure that that instrument that you're trading is what? Is a very good strategy on that. That's what make it what? A very good strategy. So now, any strategy that you have built that can still what? Not give you at least, cannot be like, it's not proven enough to like say that okay, I can survive the nature of this instrument. And for you to know that that instrument is, that strategy is good, you must at least, if possible, test it for the time frame of more than duration of what? More than 6 months if possible, meaning that 6 months to 1 year, meaning that it has survived what? Different seasonal tendency, because we have different seasons. So if it's possible that maybe, let me see, your strategy can survive the first quarter of the year, but the second quarter of the year, what of the third quarter? So if possible, you must backtest that instrument based on what? A complete, at least not less than 6 months, to know that it must stand at least 6 months. And you must also understand the nature of driver that that instrument is very good on. You must understand this. You must know that okay, this trading strategy is very good on this driver. How is the nature of this instrument on this driver? okay, this is good on interest rate. For some of you guys that are trading currency and stock market, this guy is good on interest rate maybe, but this is the strength of this guy on interest rate. This is the strength of this guy on geopolitical factor. This is the strength of this guy on this. So it means that if you know that, okay, this is the weakness of this strategy, this is the strength of this strategy. But in all aspect is that you must make sure that this strategy that you have built is good on the instrument that you are trading. If you are a synthetic trader, you must know that this strategy that you have built, it is good in what? Derivative synthetic index market. That is it. So if you understand this, let me see, drop one also in the comment section. Drop one in the comment section. If you understand what it means to have a good trading strategy, drop one in the comment section. Now, number two, once you are done with this, number one, that is a trading strategy. Number two, the next thing that you need to know that is very very important that define what success within the financial market is, number two, your risk management or money management system. You must have what? Number two, I said you must have what? A good a good money management. Sorry, I said money management. A good money management. uh, you must have a good money management and risk management. A good money management and risk management. Okay, you must have a good money management system and what? A good risk management system. I say you must have a very good money management system and a good risk management system. So now this number two, I said the first one is what? You must have a good trading strategy. Number two, you must have what? A good money management system and a good risk management system. So number one, you must have a very good money management system. Now, money management system, you must know what you need to do, the capital that you need to fund, the target of the capital, the purpose of the capital. That is based on money management system, good money management system, the capital. In fact, the everything that has to do with that capital, the source of the capital, you must understand the plan. You must have a very good plan for that particular capital that you are funding. Number two, you must have what? A good risk management system, meaning that you must be able to define what? Your risk tolerance, understand your risk tolerance, your daily drawdown, your maximum drawdown, your risk per trade, amount of loss size that you're going to use. Now, you must understand also like the margin requirement and the spread requirement based on the instrument that you are trading. Based on the instrument that you are trading, you must be able to like understand the risks attached to the instrument, meaning that is the instrument you are trading, is it a volatility instrument? If it's a volatility instrument, meaning that the risks attached to that instrument is different from an instrument that is not a volatility instrument. Yes. So you must understand how to manage one. I said your capital, that is money management. Number two, risks attached to what? Trading the capital, that is your risk management. Now, the number three here is that you must have, number three, I said three points that define success within the financial market. I said number one is what? You must have a very good trading strategy. Number two, you must have what? A very good money management system and a risk management system. So if you are here with me on point two, let me see, drop two in the comment section. Drop two in the comment section. Drops through in the comment section. So now number three here is that you must have what I call, you must be a disciplined person. Number three, you must be a disciplined person. You must be a disciplined person. You must be a very good disciplined person. For you to be a very good disciplined person means that your psychology must be very good, and your mind, the strength of your mind, you must be very strong. So you for you to like after you have built a very good trading strategy, number one. Number two, you have understood or and built a very good money management system, and what, a risk management system. Number three, we must be what, you must be a very disciplined person. Now, the discipline aspect of financial markets has to do with one, because the financial market has two aspects. One is what, the rational aspect, that is what you have documented, what you have planned to do. But the other aspect is what, the emotional aspect. Now, for you to be a successful financial trader, you must be able to what, balance and synchronize both what, your rational mind, that is your intellectual mind, that is where, okay, your trading strategy is. You have written your trading strategy, you have written your money management, you have written down your what, your risk tolerance, your risk management, and risk appetite. The next thing is that you must be able to what, stick to the rules that you have built. So, but for you to stick to the rules that you have built and stick to the plans that you have built, you must be a disciplined person. And for you to be a disciplined person, it means that what, your psychology must be good, you must be strong, and your mind must be strong. So now, for it means in general aspect, a successful trader is a trader or a person that has look for a who has balanced and synchronized both his what, his rational mind and his emotional mind to be one. And for your rational mind and your emotional mind to be one, you have to be able to like reduce the gap that has to do that. This has to do with discipline. I have discovered that most of people are saying, okay, 20% of success in the financial market is your trading strategy. Maybe 40% is 30% is what, your risk management. The remaining 60% is what, or 60 to 50% is your discipline. No, for me, I said 100% must be strategy. 100% must be what, good money management and risk management system. 100% must be what, discipline. See, in any of these three, in anyone that you are deficient of this, it must show in the financial market. Imagine now, for example, now, someone that is very disciplined, someone that has a very good risk management and very good money management, but is very poor in trading strategy, is still going to lose. That is the plain truth. That is the plain truth. Imagine someone that, okay, is having a very good trading strategy, is having a very good money management and risk management, but what, his discipline is bad, he will still lose money. And the same thing also for someone that is very, his strategy is good, his discipline is good, but he lack what, a good money management and risk management, he will still lose money in the financial market. So this means that if you are building a trading strategy, you must make sure that you have done the proper diligence that is required what, to build or to form what, a good trading strategy. The same thing when it comes to what, good money management and risk money management tolerance and system. You must do the basic diligence that is required there to have what, this good fragment. The same thing when it comes to discipline, you must pay attention to each of these three fragments for you to be what I said, a successful forex trader or financial trader. Now, so now based on these facts, I've decided to like build series to start a very good series to start series on each of these one fragment. So I'm going to like take trading strategy, build, teach you out what it means to have a very good trading strategy, how to build a good strategy. So I'm going to take also a good money management. So build this also. Then number three, I'm going to take what, the disciplinary aspect and work on it. Also build a very what, good risk, very good. Show you how to be a what, a very disciplined and a very good psychological person when it comes to what, the financial market. So guys, remember I said earlier, for some of you guys that are just joining us for the first time on this channel, like, don't forget, click on what, subscribe, and click on what, follow. Number two, click on like. The next thing that I want you to do is click on share. Click on share, guys, Join me more on what? Mjpips.